That's the biggest issue I deal with. People don't understand what's available. They get into a panic sometimes. I had a client who just had thought she ran out of resources. She owned a house, $800,000 house, free and clear, with roofing problems. We were able to, in 45 days, turn her life around. She'll never have to worry about money for the rest of her life.
I know where you always are, hanging beneath the brightest star, just so you can always shine a light on me.
Welcome to B2B Synergy, the Power Partners USA podcast, your exclusive guide to discovering the potential of B2B partnerships. I'm Alan Armijo, owner of Power Partners USA business-to-business introduction and referral service. Our members are B2B professionals who team up to provide each other repeat referral business or collaboration. Today's episode dives into the world of reverse mortgages. Tom DeLeo is a home equity retirement specialist and is a new Power Partner USA member. Tom, I'm really looking forward to this conversation because I'm hoping you can help me understand reverse mortgages.
Absolutely. Thank you, Alan.
Okay, Tom, could you explain in simple terms what a reverse mortgage is and how it differs from, say, a traditional mortgage?
A reverse mortgage is very similar to a traditional, or what we call in the field, a forward mortgage. The difference being primarily is a borrower is never required to make a payment as long as they live in the home. So on a forward mortgage, you have to make a monthly payment. On a reverse mortgage, a payment is not required, although a borrower can make a payment if they wish to.
How long have reverse mortgages been around?
Reverse mortgage came out in the 60s. Not a very popular product, not anything really like the product that we have right now. During the Reagan administration, 1989, it became more popular and more federally regulated. During that time period, it's been modified a little bit, so it is now probably the most regulated loan out there. We want to make sure that borrowers have a great deal of protection. So they've been out a number of years, but becoming more and more popular, becoming a little better understood.
How long have you been helping clients with this service, and what is your background and experience with reverse mortgages?
I've been in the mortgage business for 4 decades, primarily doing basically all types of loans. In 2008, I really started focusing in on doing just reverse mortgages. That's all I do now. I'm no longer doing commercial loans, forward type of home purchase loans. I only do reverse mortgages.
As far as terminology goes, it's a mortgage product versus a financial or insurance product, right?
Correct. Reverse mortgages are used to pay off your existing mortgage if you have one, allow for better cash flow. A reverse mortgage can be used to purchase a home. So depending on what specific need or requirement a borrower would have, I would be able to sit down with them and discuss, the benefits of using a reverse mortgage.
Okay, we'll get into a little of that as we go. I just wanted to focus a little bit on you on, what differentiates you, or what do you specialize in with regard to benefits or features you offer your clients?
The reverse mortgage is a product offered by a number of companies. Specifically for me, you're getting my experience. I've done this for over 40 years. I don't do other loans, so I know really the inside and the outside of the reverse mortgage. I'm able to really offer a client a real overview of how the product would affect them. So my experience and my specialization is really what I bring to the table.
Okay, and what is your typical client makeup?
I have 4 kinds of clients broadly. I have the client who maybe needs a little extra cash flow each month. So we can, pay off their existing mortgage if they have one, to eliminate the monthly payment. We can possibly provide them with monthly uh, funds that they can utilize. I have a second client who maybe never took out long-term care insurance. And so they're at the point now where it's either not available to them or so expensive it's not worth purchasing. So we can set up a growing line of credit that they have access to should they need the money. I have people who are very sophisticated. We do reverse mortgage loans up to $4 million so that the sophisticated investor maybe finds that he doesn't want to have a lot of excess money tied up in his house. That's dead money that he's not utilizing. So he will take out a reverse mortgage, utilize the funds how he wants. All the money that's available in a reverse mortgage is tax-free, so they don't pay any taxes on that money. So those are typical kinds of clients.
Yeah, it sounds like your expertise is needed to wade through that, right?
Correct.
Okay. Now, our network, Power Partners USA, is a B2B introduction service. We introduce professionals to each other who can help, can provide each other repeat referral business or collaboration. We are targeting this podcast to your Power Partners to bring you more repeat business and vice versa. And who are your Power Partners?
Power Partners, people I would like to work with are attorneys, CPAs, financial planners, realtors, enrolled agents, people who do tax preparation, in-home care people are good. Oftentimes a couple will utilize the funds from a reverse mortgage to pay for in-home care.
Are there any specific resources or tools you provide to your Power Partners to help them better understand and communicate the benefits of reverse mortgages to their clients, the people they're referring to you?
Yeah, I have a number of brochures, printed material that's available, and some of it's specific for attorneys, financial planners. We put on monthly webinars where attorneys, financial planners, realtors can obtain continuing education credit. And so I invite them to spend an hour on a webinar and learn about the product, learn how the benefits for their specific clients and how oftentimes they can earn continuing education credits.
You shared with me that a realtor who's a member in our network reached out to you to have coffee, and which is great. That's what we're looking to make those introductions and make those conversations happy. How did that, what was the crux of that conversation between you guys?
Well, I met with one of your members who's a long-term realtor, very well known in the community, also has a great deal of experience. And we were able to sit down and she sees the benefits of having up-to-date information on reverse mortgages, both for clients, older clients, and for possibly clients that are looking to purchase. So it was a very fruitful meeting. We both got to speak with each other and get our backgrounds together. And, I know a great deal more about her and she knows about me now, and we can be a real referral source to each other.
Is that a typical way of getting to know your Power Partners, to sit down with them over coffee or lunch?
That's the best way to do it. We're coming, for a number of years there, we were just doing everything on Zoom. But, my approach to the business is I want to meet people one-on-one now. I always attempt to either go to the borrower's house or have them come into my office. But I really like to sit down one-on-one and explain what I'm all about and what the product can do for the client.
Well, let's talk about that a little bit then. What's the biggest problem that reverse mortgages are solving for your clients? What's the solution you're providing them in their view?
Cash flow usually is a primary thing that, like I mentioned earlier, sometimes people are a little short each month. From a cash flow standpoint, this can eliminate the mortgage payment if they currently have one, can possibly provide additional funds. Maybe an investor has an opportunity to invest and doesn't want to liquidate some of their other investments in order to invest. They can pull tax-free money out of their home. So, I have a 4-page list that I sit down with the client and really try to determine what they want to accomplish. And hopefully the reverse mortgage is something that will allow them to do that. It's not for everyone. It doesn't solve every problem, but it gives them options that are available and something they can look at.
And then how do you assess those needs for the clients?
Well, if I sat down with a client and maybe go over their budget, their monthly cash flow, find out what their investments are, find out if they have savings, I can determine, each month you're not putting any money away. You're not saving any money. You're maybe drawing from your, if you have investments or savings, you're drawing from that. So, we can maybe improve your cash flow so that you can keep the money available for you should you need it. Some borrowers, are fine from a cash flow standpoint, but they never took out long-term care insurance. And an event could happen where they could need a substantial sum of money for an emergency. So in that case, I could potentially set up a line of credit that they would have access to money.
So, me still learning about reverse mortgages, it sounds like you're offering a line of credit based on the equity in the house, the property.
How we formulate what we do, what we will land is we take the age of the youngest borrower, we take the current interest rates, we take the value of the property, and that determines how much they're able to borrow.
Now, when you say borrow, what's that, the difference between that and like a second?
What's the difference between
The reverse mortgage, like in a second loan, a second lien?
Okay, we're in first position traditionally. Okay, one of the products that we offer is where we offer a line of credit, and this line of credit is potentially available, and the line of credit grows; it gets bigger over time, so that the borrower has more access to money. If they're as long as they have not accessed any of that money, they're not paying any interest on that money. So, for instance, an example, if I set up a $200,000 line of credit, that line of credit would get bigger and bigger and bigger as the years grow. They would have access to more money, but they wouldn't be paying any interest on that money until they accessed.
Right. So they're staying in their home, like in this long-term care example. Can you give me like a success story, an example of how that worked for somebody that needed long-term care using their reverse mortgage? Yeah.
Yeah. So you're 78 years old. You've never taken out long-term care. You don't have a huge investment portfolio and a great deal of savings. It's a husband and wife, and suddenly the husband has a stroke. Okay. He needs long-term care. He needs in-home care. They can deplete their savings, or in cases I've had, they've been able to set up a $300,000 or $400,000 line of credit, and they can utilize that line of credit to pay for the in-home care.
Okay. So in that case, what kind of legal implications are there with a reverse? In other words, who else should be involved in this with the client? Or do you bring in an attorney, a financial advisor, suggest that to them? How does that interaction work?
All of the above. It depends on the specifics. Some people already have access to a financial planner. If I would meet with them, explain the situation, we would line it up for them. Often I am referred by their CPA, by their financial planner, by their trust attorney. I get referrals from those professions. In my documentation, I ask if they want to pass this by someone else. maybe the children want to meet, and we need to sit down and go over it with the children so the children understand what the parent is going to. It's really what they're comfortable with.
Let's talk about that, because when somebody, say the 78-year-old, they're probably retired, right? They might have a fixed income. You're saying sometimes they don't have enough savings to afford some of the things they want or need. That's correct, right?
Right.
Okay. But what if their house is paid off and they have a trust? How, when you bring the kids in, how is a reverse mortgage involved with regard to a trust?
But we lend on revocable trust. We lend on those all of the time. In fact, one of the things I do, if I sit down with a client and I'm working with them and their property is not in a trust, I always recommend that they put the property in a trust after we're done. And then I would refer them to a trust attorney, because the last thing a client wants is to go through probate.
Right. So
we lend to trust all the time.
Okay. I'm trying to understand like the process in like the property passing down to beneficiaries with a reverse mortgage on it. What happens there?
Okay. So at the time that maybe the initial borrower passes, the property goes to whoever they will it to, whoever it goes through the trust. Okay. The reverse mortgage is a non-recourse loan. So let's just say that the people have lived in the home for 20 years. The value of the property maybe has gone down, and they owe more on the loan than the property's worth. Okay. Such as maybe 2008, where property values dropped and somebody took out a reverse mortgage in 1990. Possibly the loan against the property could be more than the value of the property. So person dies, the trustees receive the property, and they decide what they want to do. They can give the property back to the bank and walk away, non-recourse loan. The bank cannot go against any of the other assets of the estate. Maybe they want to keep that. They can buy it for 95% of the appraised value of the property. So the loan could be $600,000. The value of the property is $400,000. The people who inherited the property can buy it for 95% of the $400,000.
Right, because the parents have used the money that's in that equity.
Right. They've used the money. They've used the equity in the property, but on the other hand, maybe they've maintained their stocks and their bonds and their savings, so the heirs can receive that.
Right. So in another instance, say the house is paid off and there's a reverse mortgage on it where they've used some of it, but not all of it. In that example,
all the equity remaining goes to the heirs.
And they don't have to purchase anything.
Nope. The bank never takes title to the property. It's just like your normal conventional forward loan. The bank does not take title to the property. So the initial borrowers pass, the heirs inherit the property. They decide they want to sell it. They want to move into it. If they decide to sell it, they sell it. They pay off the reverse mortgage. Whatever is left is theirs.
So there is still something to pay off. If you take out
a reverse mortgage, there's usually a loan against the property, the reverse mortgage.
The reverse mortgage. So that has to be paid off in that trusted scenario.
Correct.
Okay. And that's why you bring in the kids early, so they know this, right?
Yeah, we like to, but what you find is a lot of the adults, their children aren't part of their financial. They don't know what's going on financially. So, if the parents are comfortable with sitting with the children and going over their finances, that the children know, the kids know what's available, what's not available. Too often parents don't do that. And I'll use dad, but dad has a fall, dad has a stroke, dad has whatever. And suddenly the bills go from $3,000 a month to $8,000 a month. Where's mom going to come up with the money? Well, if she doesn't have a huge savings account, it often has to come from the children. Maybe they're not prepared for that. So we can sit down and we can offer solutions.
Can you use money from a reverse mortgage to purchase long-term care insurance?
Absolutely. It's your money. You can do whatever you want with it. You can buy a motorhome. You can travel to Europe. You know, I've done loans for people that are, financially secure, they're not concerned so much, and they want to travel to Europe, so they take the money. What we're concerned with when we close the reverse mortgage is that they're able to pay their property taxes, pay their insurance. If they have a HOA, that they can pay their HOA, and that they maintain the property.
Right. So
their money.
Right. So, and then what is the cost structure of your services?
Out of pocket, it's very small. It's about the independent counselor. I didn't mention that before we move forward with a reverse mortgage, HUD has provided a list of counselors who counsel in reverse mortgages. The borrowers are required to go through counseling. It's about 45 minutes to an hour on the phone. I provide them with a list where they choose which counselor they want to use. That counselor charges between $125 and $175. The borrower pays the counselor directly. An appraisal is done. Depending on the value of the home, appraisals run about $575. On higher value properties, higher than that. And we charge $300 that goes to the appraiser out of pocket. So it's between, say, $425 and $500 upfront. The rest of the costs are charged within the loan, so they're not out of pocket.
And then they can start taking disbursements, or just, what do you call it? Just pay, pull money out of that as they go.
As they go, whatever they want.
Okay. So what type of ongoing support or services do you provide your clients after that reverse mortgage gets put into place?
Okay. We are a servicer. We don't sell our servicing. So once the loan closes, they receive what's called a welcome letter. And we have a whole servicing department that basically services their loan. Every month they receive a statement, tells them how much the line of credit is, if that's the product they took, how much the line of credit is and how much it's grown, what the loan balance is grown to. Should they have any questions, I'm available, or our servicing department is available. Someone holds their hand basically through the whole process. And funding.
I'm sorry?
And after funding.
Okay. As the years go by, can terms be changed in a reverse mortgage?
Yeah. When terms meaning some of the benefits. So let's just say that when they initially took out the loan, they wanted $1,000 a month to be sent to them.
Mm-hmm.
Okay. And then they decide, no, we don't need $1,000 a month. We want it to stay in that line of credit growing. For a small servicing fee, they can change the loan term so that instead of getting, they'll get $0 a month, or maybe they need $2,000 a month. But even after the loan funds, they can modify that.
Okay. So what are the common myths or misconceptions about reverse mortgages that you find yourself dispelling during client sessions or talking with power partners?
The bank is going to take title to your home and you're going to lose your home. the heirs are going to be forced out of not receiving the property. Those are the two biggest.
Why did those, like, were there stories like that in the past, or did that get corrected?
Maybe in the way past, people have the heirs oftentimes find that if a property was foreclosed on, it was because property taxes were not paid, the insurance was not kept up, so possibly the property was foreclosed on. But like a forward loan or a traditional mortgage, if you don't pay your property taxes and you don't pay your insurance, and in that case, maybe you're not making your mortgage payments, you're going to get foreclosed on. So it's a lot of misinformation is passed from the neighbor down the street who had a second cousin who took out a reverse mortgage, and no one knows the real reason what happened, and that gets passed on. Unfortunately, we're dealing with senior citizens who oftentimes, in some cases, are not financially sophisticated, and they take advice from people who really have no idea what they're talking about.
Yeah. What happens if the 78-year-old, say they want to downsize, they want to sell, and they have a reverse mortgage on it? What happens then?
Happens all the time. I get those requests from realtors often. They sell their home, they pay off the reverse mortgage, whatever equity is left over, they keep, and sometimes they decide they want to purchase with a reverse mortgage. So, I've had clients who in Long Beach, they'll sell their home for $900,000. Maybe they owe $200,000 on it. They take roughly $700,000 minus the closing costs, and they purchase in the desert. You get a pretty nice home for $450,000 in the desert. So instead of paying cash for the house in the desert, they'll do a reverse mortgage and maybe only have to put 60% down and put the rest in the bank or do whatever they want with it. And
Okay. You're going to have to repeat that one for me, because I was going to ask the question and you answered it. But so how do you use a reverse mortgage if you want to buy a property? Can you explain that again?
Sure. Okay. And let's say you're buying a $500,000 house. Okay. And if you're 78 years old, oftentimes they couldn't qualify for a traditional mortgage.
Mm-hmm.
So their option would be to pay cash. So they paid $500,000 in cash to buy the house. Okay. They wouldn't have any payments because they paid cash for the house. If they wanted to purchase it with a reverse mortgage, maybe they put 60% down or $300,000. Okay. $200,000 would be a reverse mortgage. They wouldn't be required to make a payment. And they take that $200,000 and invest it, put it in the bank, do what they want with it. So at the close, they'd have an additional $200,000 freed up for themselves.
And can we say that that's the way of using a lot of equity in your house, say if you have no mortgage payment?
Yeah, you're utilizing your cash flow is improved tremendously. You don't have a mortgage payment. But in the case of purchasing in that scenario that I gave you, they have $200,000 liquid, where if they bought the house for cash, that additional $200,000 would be tied up in the house.
Yeah. But there's no way of having two. At that point, would you have two mortgages?
No, you'd have one mortgage.
One mortgage.
You'd have the reverse mortgage.
Okay. But if they would have a payment on the other house still, though, right?
No, they sold their other house.
Oh, they sold it, so in other words, they're replacing one with another.
Correct.
Okay, because they want to leave, say, Long Beach and go to Palm Springs or something.
Yeah, exactly. And they have a 2-story house. You can't go up and down the stairs anymore. They want a 1-story house. They want to Some people say downsize. I say right size. They want to right size the house for the rest of their lives. So they sell their current residence and they purchase a new resident with a reverse mortgage. And okay. They're not required to sell their first house. They can buy another house with a reverse mortgage as long as they're moving into it. And if they have the means to pull it off, they can rent out their first home. It's up to them.
In that case, with you can only do reverse mortgages in California. What if they want to leave the state? Does that apply?
We're in all states. We're in 48 states. If they wanted to do that, they could contact me and I can hook them up with a professional who could handle it throughout the rest of the United States.
Okay. We've covered a lot. You think I'm forgetting anything? Or anything you want to bring up?
Well, I want to mention that the one of the advantages of using someone like me is I have a very well-seasoned, well-operational team. I have an assistant who's very, very good at what he does. I have a loan processor and transaction coordinator. So we're able to get deals done quickly so that from the reverse purchase standpoint, we're the number one in the nation, and we can close reverse purchases in the typical time frames, 30 days that normal escrows take place. So anyone purchasing with a reverse mortgage shouldn't be concerned that it's going to take an inordinate amount of time. In markets past, where properties were getting 2 and 3 offers all cash, reverse mortgage purchases were not as prevalent as they are becoming, because now there's not as much pressure on closing transactions as there once was. We can still meet the escrow times.
Before, like a lot of cash deals were getting done. Now the process is taking longer. Allows for this option.
There's not as many duplicate offers as there once were. So the reverse mortgage is now becoming a more popular and valuable tool than it was in the last few years. We're seeing more and more people wanting to take advantage of it.
Well, we covered a lot, Tom. We'll put your contact information in the show notes here, as well as promote you as a power partner on social media. Add this podcast to our YouTube channel, as well as our website, and all the other places where people can get their podcasts. They can hear this. So thank you for your time. Thank you for joining Power Partners. I look forward to working with you.
Great, thank you, Alan. Really appreciate it.